Alrighty, guys, you better be ready for this week, man. It's going to be a big one. We have 5 companies to break down, all of which are reporting earnings this week. So we have to break down the estimates for earnings per share, revenue, the stock charts, what I'm looking to do, and we'll break down the indexes in the beginning of the video. Guys, quickly, we'll take a look at where we're at heading into this week. But first, hit the like button, make sure to subscribe, and of course, get your free stocks from Moomoo once you open up your account using that link down below and fund it with at least $100. You get 5 free stocks and a $30 cash reward, and fund your account with at least $1,000. You get 10 more stocks, and overall, for now, your uninvested cash will earn up to 8.1% APY, which, guys, it's a no-brainer. So check out the link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers, take a sip of your coffee, guys, of course, and let's get right into the video. So check it out. We are heading into this brand new week after getting hit pretty aggressively on Friday. You guys probably remember, but if you don't remember, maybe your mind's a bit fuzzy, don't worry. We'll do a refresher right now. So on Friday, the S&P 500 went down 1.3%, and SPY right now is trading right above the 180 moving average on the 4-hour chart, which, by the way, it looks like the uptrend is holding, and this could be, keyword is could, be a spot where buyers come in, as it has been a spot where buyers have came in the past. You guys can see over the last couple of months, this trend line has held on SPY and Triple Q for that matter, which went down about 2.4% on Friday. Not the best day for Triple Q on Friday, but still, man, it's holding trend. We're above the 180 SMA. The uptrend is looking pretty good. So even though we had a rough day on Friday, it's not the end of the world. In fact, it's far from the end of the world right now. So that's Triple Q. The Dow went down about 0.75% on Friday, and it closed right above the highs from the middle of October, where we hit about 43,300. So we closed right above there as support. You guys see right here. And the Russell is, pretty much at a big support as well, right above the 50 SMA. This pulled down about 1.4% on Friday, and we're holding above the highs from the middle of July all throughout the middle end of October. We're holding above those highs as support heading into this week, which is really good for the bulls. So overall, guys, what you have to understand here is we got a pullback on Friday, and it was a much-needed pullback, and the charts look really good. They look really good, especially if buyers start to come in here on Monday, Tuesday. You know, we could get a nice rebound after this pullback. So what do you guys think? Let me know your thoughts in the comments. And by the way, guys, make sure to sign up to my email list where I'm sending you for free my top 3 stocks every Monday right to your email. All you have to do is put your first name and your email using that link in the description box down below. And again, it's free, no spam, no BS, none of that. And I'm sending out an email tomorrow, so make sure you guys get in there. Again, it's free, link down below. So the first stock for this video is Walmart, ticker symbol WMT, and Walmart is reporting earnings on the 19th, which is on Tuesday in the morning. And this stock, guys, holy smokes, has been crushing it. This stock was at $58 per share back in March. Even back in May, it was at 58, 59. So it didn't do much for a couple months there in March, April, May. But since that point, man, we have been on a rampage. Walmart stock is up 42% from the middle of May, and the trend is clearly holding. Uptrend is holding, no signs of a pullback, and they're projected to report revenue of $166.57 billion versus $159.44 billion from last year, up around 4.5% to 5%. So they're not growing revenue massively year over year at this point, percentage-wise, but they're still growing 4 or 5%. Not bad. And EPS, the estimate is 53 cents, and last year they did 51 cents. So not bad year over year projections there for Walmart. And again, the stock is still up massively, uptrending, no sign of a pullback. So yeah, man, let's see if this slips a little bit down towards 81, 82 bucks, right by the 4-hour 180 SMA. That might be a buy the dip. Maybe a bounce back opportunity there. Not for sure, not guaranteed, but if it sells off just a little bit more, I'd be interested more in it as a trade. But for now, it's pretty much priced to perfection. I think they did a stock split too, if I'm not mistaken. 3-for-1 stock split. And right now, we just hit an all-time high. So, guys, keep that in mind. Heading into earnings here on WMT, we also have LOW, also known as Lowe's. We have Lowe's reporting earnings this week, and they're on Tuesday, same day as Walmart in the morning, same time as Walmart. We're getting Lowe's. So, guys, this stock has been kind of reversing trend the last month. I mean, we were ripping like no other from the beginning of July all throughout the middle of October. So for 3 months, we ran from 211 to 287, 35% move. But since then, we've been making some lower lows, lower highs, and you guys can see it on the 20-day chart for sure. You guys see it there on the 4-hour. If I zoom in, you can see it as well. We're making some lower high action here, and we're slightly above these moving averages. So I'm interested to see, and we kind of have a wedge here. I'm interested to see what direction Lowe's ends up picking. Do we break 275, start going to the highs from about a month ago being 287, or do we break these moving averages, break trend, and start slipping down to 258, 260, where we were about 10 days ago, earlier this month? Does that break? Do we slip even further? So let's see what direction Lowe's wants to pick here. EPS estimate right now is $2.81. Excuse me. Versus, might need some coffee there, guys. Cheers. $3.06 from last year. So EPS will be declining year over year on revenue of $19.91 billion versus $20.47 billion. So EPS and revenue is projected to decline year over year. Revenue will be down on average, projected 2.7% year over year. Got to take a sip of coffee to that. Not the best projections here for Lowe's, but we'll take it. It is what it is. So, yeah, watch out for direction here on LOW. What side are we going to pick? Let's see. Time will tell. So the next one here, and by the way, guys, make sure to smash that like button if you haven't done so already, and make sure to subscribe. I actually just checked my analytics last night. 75% of you guys, unbelievable. You watch the videos, but you're not subscribed. You watch the videos, but you're not subscribed. So if that's you, make sure to subscribe. We're trying to get to 50,000 subscribers, and I need each and every one of you to subscribe to get to that goal. Cheers, by the way. I appreciate all of you guys for tuning in as always. So Snowflake, ticker symbol SNOW, they're reporting earnings. You guessed it, this week, and they're on, I believe, Wednesday. Let me double check that though. 20th, which is on Wednesday after the bell. We're getting Snowflake's earnings, and their projected EPS of 15 cents versus 25 cents from last year on revenue of $898.46 million versus $734.17 million from last year, up 22% year over year. Not bad. EPS will be declining year over year, but revenue's growing 22% on average projected, which is pretty good. So we can see here the trend is ugly. Let's be honest. The chart looks like crap. I think Buffett, didn't he sell out maybe completely of his position a couple months ago? There's been a lot of just downside. I don't even know how to explain it. Ever since this stock IPO'd, I mean, this thing, it was up initially, for a year or two there, not even, but now it's pretty much at an all-time low. It's not a bad company, not a bad stock, but it is what it is. Here we are. And clearly we are getting a bit of momentum heading into earnings. You guys can see Snowflake this past week took out the highs from the middle of October where we peaked out at 127. So about a couple days ago, we hit 134, 135. That's a good sign that we're starting to gain momentum here. But still, man, we are very much in a downtrend. We have many resistances left to break here that, quite frankly, we're not getting the confirmation that we're heading there to break them in the first place. So Snowflake, we have to watch out for their earnings on Wednesday after the bell, ticker symbol SNOW. We also have Target, TGT, this week. I believe they're on the 20th on Wednesday, same day there as Snowflake. And this chart looks pretty wonky as well. We're flat over the last many months, 6-7 months. But also you could argue we have an inverse head and shoulders in the making. Do you guys see it right here? We have the left shoulder, got the head right there, got the right shoulder right here. You guys see that? So if TGT, if this plays out, the inverse head and shoulders, which, it's not far-fetched or anything, but, I mean, we're not getting any signs of it yet. But if this right shoulder wants to play out, for the inverse head and shoulders to play out, we're going to have to break out of the mid-150s, 160, start to gain momentum out of this trend line, which, well, we're not getting signs of that quite yet. Target has been struggling in the mid-high 150s, low 160s pretty much since May, since the end of May, which at this point is 6 months ago. So, guys, I'm going to set my alert for now at $160 per share here on Target. Mark is at or above 160. And I'm telling you, if we break out of there on good earnings, maybe this right shoulder starts to play out. We'll see, though. EPS is projected at $2.30 versus $2.10 from last year on revenue of $25.9 billion versus $25.4 billion from last year. So up around 2%, not that crazy, but I guess better than Lowe's, which was down 2% projected for revenue, that is. So, yeah, guys, that's what we're looking for on Target. We'll see how it plays out, TGT. And last but not least, ladies and gentlemen, we have NIO, which NIO is a Chinese company. Keep that in mind, electric vehicle company out there. And this, along with other Chinese stocks, it went ballistic for a couple weeks here. We went up 100% from, it looks like, early September to about the end of September. So we went up from around, $4, or actually, no, $3.70 up to almost $8 per share. Unbelievable. And now we're back to $4.50. So we've given back pretty much all of that gain, about 45%. Heading into earnings, which are on the 20th, so that's Wednesday in the morning. So NIO is interesting, guys. Interesting setup here. We got overbought. Now we've shaken out all the weak hands. We're very oversold. We actually have a bit of a bullish divergence a little bit here that I'm seeing. So if NIO reports good numbers, man, this could end up recovering big time. And I think it is a short or a high short interest stock. I believe there are a bunch of short sellers in this one. So who knows? Maybe a short squeeze could be around the corner as well. So earnings per share for NIO, negative $2.19 is what is projected versus negative $2.28 from last year. So they're losing a little bit less money this go around compared to last year, but still they're losing a decent amount of money on revenue of $19.1 billion versus $19.07 billion from last year. So, not much growth at all for NEO, at least for this quarter. We'll see what the comparables look like down the road in the next couple of quarters. But yeah, man, for a growth company, quote unquote, they're not growing much as of now. They're flat. But still very much worth watching as the stock is oversold, very oversold, heading into earnings. So those are 5 companies, 5 stocks I'm watching for this week. Let me know what you guys think in the comments down below, what other stocks you're watching. Maybe I'll make another video going over those. Let me know in the comments which ones you're watching. Don't forget to hit the like button. Make sure to subscribe. And, of course, get your free stocks from Moomoo once you open up your account using that link down below and you fund it with at least $100. You get 5 free stocks and a $30 cash reward, and fund your account with at least $1,000. You get 10 more stocks, and overall your uninvested cash will earn up to 8.1% APY, which, guys, cheers to that. That's the best deal on the market right now. So use that link down below or go to StockSurfFest.com/Moomoo. And with that being said, cheers again, guys. I'll catch you in the next video.